Khalil Jashan is the executive director of the Arab Center in Washington, D.C. He says the relationship between the U.S. administration and Saudi Arabia seems to be at its closest.
As an old observer of this relationship, I don't think that relationship or bilateral relationship and specifically has not been nurtured as well as it should have been over the years. So it's been rocky. It's been at the mercy of changes from one administration to another, and even changes within administrations themselves. So the relationship has seen a lot of ups and downs politically. So to see the focus and the choice of words, if you will, being used by the President of the United States at this time is very interesting. And it shows that you're right, that the relationship is probably at its best. But frankly, fancy words and you know, the type of compliments we've heard, rosy compliments we've heard from the President, are not a substitute for qualitative, if you will, political or diplomatic progress. It remains to be seen whether this administration will really cater to the demands of Saudi Arabia with regards to its own needs, security needs, and so on, aside from the deals that have been signed thus far. Because these requests are not limited, if you will, to arms purchases. It's a much bigger relationship than spending or investing some Saudi resources in American arms industry. So whether the demand for, let's say, an immediate ceasefire, lasting ceasefire in Gaza, other issues like Syria, yes, the sanctions have been lifted, but then now the challenge just begins in terms of reconstruction, in terms of building a solid relationship with the West.
For more on this, we're joined by Ahmed Asiri, a research strategist at forex broker Pepperstone. Good to have you with us, Ahmed. Now, how significant is this pledged $600 billion Saudi investment for America's real economy? Does it translate into jobs and productivity, or will most of it go into financial assets?
Thank you for having me. Actually, it's the historical visit for Trump to the Middle East and Saudi Arabia. We can see deals were signed yesterday that amount to $300 billion, which is a huge number, and that could possibly pave the way for further agreements and deals that could reach $600 billion. And on the very optimal case, it could mount up to $1 trillion, which is a very huge number. Those deals will actually translate in a productivity and also jobs, whether that in Saudi Arabia or in the US, as will really improve the sentiment for economic activities in both countries and travel down through the supply chain and fundamentally help the economy, as well as instant reflections of that in the price action and financial assets.
Right, and part of this deal includes a $142 billion arms package, which the White House has described as the largest defense sales agreement in history. What multiplier effects could this have on the wider US supply chain, and how might it influence the federal budget balance?
That will fundamentally help industries in the US, as arm deals typically constructed in a long period of time. So this above 140 billions, which was signed in our deals, will perhaps be on a period of 10 years, and that will certainly help the supply chain and industries in the US. This will also help in Saudi Arabia, as part of it is add to the domestic industries in Saudi Arabia, although that has a threshold, as the US will retain the largest portion of this deal. So this, again, will also have a positive economic value for both countries and both economies.
Right, and Saudi funds promised $20 billion for artificial intelligence projects. What could this potentially include for Washington, rather than having Saudi-backed data centers in the country?
So this was very exciting part of it, which is the advancement in AI technologies and chips. We've seen the deal was signed when it comes to NVIDIA and the export of 18,000 chips of the advanced Blackwell to Saudi Arabia. And that really supports Saudi Arabia ambition when it comes to data centers. The country has been really has the intention to invest further and develop its own capabilities when it comes to data centers and AI. The previous administration restrictions when it came to data and the controls and chips when it comes to the control around it restricted this development. So this deal was really positive for both sides. We saw also NVIDIA yesterday was 5% up on the back of this news. For both countries, it's positive when it comes to data centers and advancing those capabilities.
Right, and given the intention to stretch this investment to $1 trillion, as you mentioned earlier, do you see signs of over-concentration risks for Saudi Arabia's public investment fund? And how could that spill over into US capital markets?
So the over-concentration from the public investment fund is we will reassess that from a few angles. So the public investment fund is almost $1 trillion investment fund, and it has very long horizon when it comes to investment. U.S. capital markets, by far the deepest market when it comes to liquidity and the derivatives markets. So I think on that level of capital, it's normal for those really large sovereign fund to have exposure to the U.S. Although public investment fund is their main exposure is internally, domestically in Saudi Arabia, and has also exposure in the U.S., which is less than half of the portfolio, and that's also across assets, whether that alternative investment or also directly in the capital markets. So that exposure there in the US is being well diversified, and it's over the long term. So I don't see that as over concentration. It's naturally a function of the depth of the US market.
All right, Ahmed Asiri, research strategist at Pepperstone, thank you very much for joining us.
Thank you.